Seeds of Wisdom RV and Economic Updates Monday afternoon, the 8th of September 25. Listen to the full version on the official dinarreport.com blog and become our supporter on Patreon. Good afternoon. Dinar recaps. SEC launches cross-border pump and dump prevention task force. The new initiative targets market manipulation schemes and signals future reforms for crypto assets. A new SEC task force. The U.S. Securities and Exchange Commission, SEC, has unveiled a new cross-border task force aimed at protecting American investors from fraud. The initiative will focus on foreign companies that attempt to skirt U.S. oversight through schemes like pump and dump operations. SEC Chair Paul S. Atkins emphasized, "We welcome companies from around the world seeking access to the U.S. capital markets. But we will not tolerate bad actors that attempt to use international borders to frustrate and avoid U.S. investor protections." The task force will consolidate investigative resources and give the SEC broader reach against transnational fraud. Crypto reform on the horizon. Atkins linked the new initiative to the SEC's Project Crypto, which supports President Donald Trump's push to make the U.S. the world's crypto capital. He signaled that the regulator is preparing to overhaul how digital assets are treated under securities law. "We will work to bring crypto asset distributions back to America. The days of convoluted offshore corporate structures, decentralization theater, and confusion over security status are over," Atkins said. He added that the SEC had previously discouraged crypto-based capital raising, pushing innovation offshore. The new approach seeks to reverse that trend and restore opportunities for investors. Why this matters? The SEC's new task force reflects a broader shift: tighter scrutiny on global market manipulation and a coming reset in crypto regulation. For U.S. investors, the message is clear. Washington intends to both protect markets from foreign fraud and position America as the center of digital asset innovation. This week's U.S. economic calendar. CPI, PPI, and jobs data to watch. Markets brace for key reports that could shape the Fed's September decision and ripple across stocks, gold, and crypto. Markets price in rate cut. Traders enter the week with high conviction that the Federal Reserve will cut rates at its September meeting. Futures point to a 96 to 97% probability, bolstered by weak labor market data showing just 22,000 jobs added in August. Bond yields have slipped, equities are climbing, and gold has reached new highs near $3,588 per ounce. Tuesday. Inflation revision. The week begins with a BLS 12-month inflation data revision. If revisions trend higher, it could pressure the Fed and weigh on Bitcoin and Ethereum. Softer numbers may instead provide relief for risk assets. Wednesday. Producer Price Index. Midweek brings the Producer Price Index, PPI. Rising wholesale prices would signal sticky inflation, a negative for risk assets. A cooler PPI, however, could give crypto markets room for a rebound. Thursday. CPI and OPEC in focus. Thursday is the most critical day, with the Consumer Price Index, CPI, for August released alongside OPEC's monthly oil report. Rising energy costs could intensify inflation concerns, creating a double catalyst for volatility in equities and digital assets. Friday. Consumer sentiment and inflation expectations. The week ends with the University of Michigan survey, offering a look at consumer sentiment and inflation expectations. Persistent price concerns could dampen market confidence, while optimism might fuel a late-week rally in crypto. Why this matters? With inflation still the Fed's central concern, this week's data could set the tone for the final quarter of 2025. Traders are watching bonds, commodities, and crypto closely as the Fed's next move, and broader risk appetite, comes into focus. Ripple's SEC battle is over. Time to challenge Swift? With legal clarity finally secured, Ripple turns back to its original mission, competing with the world's dominant payments network. Ripple clears its legal hurdle. Ripple has ended its long-running battle with the U.S. Securities and Exchange Commission, bringing long-sought legal clarity to XRP, now trading near $2.93. The settlement removes a major obstacle that has hung over the company since 2020 and allows Ripple to refocus on building its payments network. How Ripple compares to Swift. The Society for Worldwide Interbank Financial Telecommunication, SWIFT, established in 1973, processes over 53 million messages daily across 220 countries. While SWIFT is deeply entrenched, critics argue its system is outdated. Transactions often take several days and involve high fees. 1 in 10 transactions fails, while 1 in 20 settles late. Even with ISO 20022 upgrades by late 2025, many see SWIFT as legacy tech, reliant on XML. By contrast, Ripple's blockchain ledger offers near-instant settlement, lower costs, greater transparency and traceability. CEO Brad Garlinghouse has long framed Ripple as a modern alternative to SWIFT, saying as early as 2018 that the company was taking over SWIFT by signing banks and remittance firms onto the XRP ledger. Why SWIFT still holds the advantage? Despite Ripple's momentum, the banking sector remains slow to change. Blockchain advocates note that replacing SWIFT's infrastructure could take 5 to 7 years and cost hundreds of millions of dollars. Banks continue using SWIFT because it is already universal, trusted, and familiar. As Ripple's Cassie Craddock put it, scaling to the level of traditional providers requires tackling 2 key hurdles: usability and regulation. The role of regulation and stablecoins. Ripple now benefits from unique legal clarity on XRP, but broader adoption also hinges on regulatory frameworks like the Genius Act, which sets rules for stablecoin issuers. Ripple's own stablecoin, Ripple USD, is being positioned as a bridge between blockchain innovation and traditional finance. Stablecoins are simple, pegged to the dollar, and behave like cash, Craddock noted, adding that this familiarity is key to winning over institutions. Can Ripple truly challenge SWIFT? SWIFT's ubiquity is its strongest moat. For Ripple to compete, it must overcome regulatory inconsistencies, risk-averse banks, and skepticism over XRP liquidity. Still, U.S. policymakers are creating space for private digital assets to complement traditional finance, and Ripple is well positioned to benefit. As Garlinghouse said earlier this year, the market opportunity is massive in the U.S. There's an opportunity to modernize the payment systems from SWIFT. Why this matters? Ripple's victory over the SEC marks a turning point, but SWIFT remains a formidable incumbent. The battle ahead is not legal but structural, convincing banks and regulators that blockchain can deliver efficiency, security, and compliance at global scale. Listen to the full version on the official dinarreport.com blog and become our supporter on Patreon.
Source: dinarrecaps.com